was a study done about 3 years ago from the Business Exit Institute, and what they found is that 75% of business owners would retire today if their financial security was assured. But there's not. They have a gap. What they have today is not enough to provide them with the financial security that they need, so they need to continue working in the business. So part 3 of our 7-part series on exiting your business, we're going to look at how you can discover what your gap is. So what is the difference between where you are today and where you need to be in order to retire with financial security, retire successfully? My name is Ashley Michike. I'm the CEO of True North Retirement Advisors, where we specialize in helping business owners transition out of their business, successfully exit their business, and retire. We do investment management, financial planning, 401k, employee benefit plan consulting, and exit planning. In the first video of this series, we looked at valuing your business, and that's really the first step in understanding where you are today, because once you take inventory of all of your financial resources and understand what your business is actually worth, you'll be able to take the next step in discovering, okay, here's where I am today, but this is what I need to retire. We've got 2 best friends. They've been business partners, buddies for the last 30 years. They have a very successful business, and this business is worth about $1.5 million. And Jerry and George own the company. They're split down the middle, so they each own 50-50 in this particular business. And Jerry is a bit older than George. He wants to retire about 5 years prior to when George wants to exit the business. And he's pretty close to getting to that point. So we need to figure out what Jerry's gap is. So first of all, he has his business that's worth about $750,000, his share of the business. But that's the pre-tax value. Once Uncle Sam comes in, once the taxes are taken care of, I'm being generous and assuming he's going to have about $600,000 after taxes. Jerry has also been a very diligent saver and investor over the years, and he has a portfolio of about $2.7 million. So when you combine the value of his business with his investment portfolio, you get a total net worth of $3.35 million. Pretty good. He's done pretty well for himself by pretty much any standard. Jerry enjoys income today of about $300,000 a year from his business venture with George. But he says, you know what, I don't really need that $300,000. What I really need is probably about $225,000 pre-tax. So there are a lot of ways to get at this number, but Jerry says, you know what, before taxes, I need about $225,000. Now, the sources for what's going to provide that income I've listed down below that. So he has a rental property. It generates about $18,000 of income for him every year. He's going to receive Social Security pretty much because his income has been so high, pretty much the top income rate that he'll get from Social Security. And his portfolio income, he's going to be able to draw about $134,000 out that first year in order to sustainably make that last through retirement. Here's the problem. I add all of those income sources up, I don't get $225,000. I get $185,000. So we now know that Jerry has a gap. Okay, now this is the beauty of this, is that knowledge is power. Once we know A, if there is a gap, and B, how big that gap is, then we can start to take steps both on the personal side and the business side to start closing that gap. what is a realistic income that I'm going to need in year one of retirement? And you can either do that pre-tax like I've done here, or you could do an after-tax figure as well. It doesn't really matter. The important thing is to understand what you're going to need. And a big part of that is just tracking. So if you don't really know, if you want to start tracking your expenses, just keeping track of where your money goes every month, how much you really need to pay the bills, how much you need for discretionary things, travel, other things like that. The very first step in discovering your gap is going back and taking inventory both of what your personal assets are worth and your business. Find out what your business is worth. In the very first video in this series, I talked about how you can go about doing that. We have a free tool, a free checklist that will, with 8 pieces of information that you should be able to pretty readily find. It should be at your fingertips. This is like revenue, pre-tax income, what you pay yourself, officer compensation, and 5 other metrics. So it's a total of 8 metrics. You gather that information and then you can go and value your business. We make a valuation tool free, no strings attached, to allow you to see what your business is worth. Because until you know what your business is worth, you really can't take these other steps in figuring out what your timeline is, how big your gap is. That's impossible unless you know what your business is worth. And I'll link to a link below where you can get the checklist, get free access to the valuation tool. It's truenorthra.com/value my business. Everything, all the tools you need to value your business are right there. It's 100% free. And what's really interesting is after this step, after you valued your business, understanding your timeline and your objectives, and then figuring out what that gap is, the exit planning process then diverges from here. Because from here we go towards implementing some of these things that are going to help close the gap, and taking further steps to identify a successor. Depending on who that successor is, that's how we can really go down a lot of different paths from this point forward. Thank you so much for watching. My name is Ashley Michike. If you like this video, come on back, because this is only part 3 of a 7-part series where we're outlining the major steps that it's going to take to exit your business. If you enjoyed this video, please like, comment, subscribe, and come on back next time.